What's up, guys? Welcome back to another episode of Spark to Fire. I'm your host, Landon Rhodes, and today we have one of the craziest, coolest guests I've ever had on the show, someone that is an absolute legend in the CPA world, Tyler McBroom. Tyler is a tax professional who loves to help his clients keep as much money as possible from Uncle Sam as they grow their businesses. Tyler grew up hearing his CPA father talk tax strategies with his business owner friends on ski trips, and now he puts that knowledge to use every single day and partners with his father currently at their CPA firm, Measured Results. It was recently featured as Intuit's Firm of the Future, and he has been recognized by Tony Robbins as a true financial leader and one of the best virtual CFO coaches in the world. Tyler continues to grow his influence through his best-selling book, Cashflow Grow. This book is amazing. Highly recommend you guys check this out. It's like $8, but it's, oh my gosh, dude, the ROI from this alone is crazy. And that landed on the top 500 books in Kindle and hit number one, and not just one, but 4 categories on Amazon. So guys, really recommend you guys check this out. It's Tony Robbins approved. I obsess over Tony Robbins. He's like the OG. First book I ever read, fun fact, first book I ever read cover to cover was Awaken the Giant Within. And it totally changed my life. So that's a huge stamp of approval from one of my biggest mentors. So Tyler, thank you so much for coming on the show, man. Wonderful to have you on.
Good to be here. Thanks for having me.
Very cool. So, so in kind of Spark to Fire fashion, what we do is we start off by kind of understanding, what was day one for you when you kind of, at the beginning of your entrepreneurial journey, before you knew you wanted to be an entrepreneur or be a business owner. What were you like before that point, and what was kind of that tipping point or that Spark to Fire moment for you? Take us back there. What was that like?
Yeah. So, as you heard, I kind of grew up with my dad being an accountant. And so as a result of that, you either go one of two ways, and that's straight into the accounting business or as far away from it as possible. And I actually did the latter, and my degree was in creative writing, in English. And so I went in, when I was coming up in school, it was when the economy was booming, and I had a couple of professors say that, studies show that it doesn't matter what degree you get, just that you get a degree for career success. And then when I graduated into the '08 recession, I learned that that wasn't the case, and a degree in creative writing doesn't get you jack. And so, I kind of dabbled, and I wrote a novel, tried to get it published, and
you wrote a novel?
Then I did.
What is your
it's
novel
still sitting
called?
on my shelf. I gotta publish it at some point, but it's a young adult kind of fantasy novel. But then really just got tired of being broke, and went back to business school. Kind of thought I'd take a stab at marketing. Realized, because I didn't want to be an accountant, because I didn't want to sit behind a desk, and then I realized, if you go into a career that's, quote, sexy, like marketing, you're still sitting behind a desk. You're just making less because everyone wants to go into that career that is, quote, sexy. Yeah. And so kind of through a roundabout way, found myself realizing that maybe accounting wasn't such a bad career after all. Worked for, a couple other firms just to get some experience separate from the family business. And then between my experience working for Disney World in college, and then working for a couple other CPA firms where they did the 80-hour-a-week grind, where you're just chained to a desk and you've got to wait 5 or 6 years before you even talk to a client. I didn't want to wait that long, and I didn't want to go through that system. Mm-hmm. And then, so I kind of got a taste of working for myself when I became, partner and owner at my firm with my dad at the time, and said, I'm never going to work for anybody else but myself ever again. And so once you get a taste of it, you can't go back, even if someone could offer me, $1 million a year W-2 job, and even if I made a quarter of that as my self-employed income, that you can't put a price on working for yourself.
Yeah, I feel that for sure. And so was there any specific moment where you're just like, dude, enough is enough? Or was it just over time you kind of started to realize that this isn't the route?
No, I would say if there's a moment as far as what made my transition to go start, going down that path of being a firm owner, when we had my daughter, Sadie, and we were living away from my hometown, and then kind of just got the opportunity. My dad said, "Hey, let's partner together, and I can teach you how to run a firm." And so I said, you know what, if I do this, I'm going to get to be in control of my own destiny. And that makes a huge difference as far as me being able to fulfill my role as a father and be with my kids instead of away from them because someone else says so. And because I'm building a fortune for somebody else rather than building a fortune for myself. If I'm going to be away from my kids and working hard and grinding, which, that's been plenty of that too over the years of going to events and building my own brand and everything. But at least I know I'm doing it to build a legacy and build a future for my family.
Yeah, that's good. That's good. So what was the start, when you got started with the family business? Was it, did you guys just immediately took off? I mean, what point did you enter in versus where you are today in terms of growth?
Yeah. So, when I came, it was 4 people, including my dad and I. And then when I left, so I actually just a couple months ago with my move to Florida, actually kind of separated from the family business and we're going, I just wanted to totally leave California for tax purposes. So when we did that split, we were at just shy of 50 people in under 5 years of time. Wow. And we started doing that by just giving, the growth path started by we came up with kind of a good value add speech formula, just sharing tax tips, like a lot of the stuff that, we may get into today, and then just giving speeches at local real estate offices, because that was free and they're looking for trainers. And then as we started growing that and started taking that and giving us a little more growth, a little more fuel in the form of revenue, that's when I said, I'd always wanted to build a platform on social media. And so we took that growth, and in kind of really it was October of 2017, where I said, let's take this opportunity to go all in on social media. I came across someone that was local to the area when I was just browsing LinkedIn, who had done an internship with Gary Vee his social media team. And he was just graduating college. And so I said, hey, I know this guy could probably plug in and is at least familiar with the kind of stuff I'm wanting to do from a value add and put content out there standpoint. And so I said, let's, even though, when you look at the typical marketing budgets of most accounting firms, they're not spending a full-time salary on a content creator at the revenue level and team level that we were at. But, and there was probably 6 to 9 months before it even started showing any traction of posting literally 3-4 times a day. And my dad at the time was going, "Are you crazy? Like, what are we doing? This is stupid." And then suddenly, then it had this flywheel and started really, really taking off. And then, as part of that, ultimately led to the Tony Robbins partnership and everything else that we've got going on.
How did he just saw you online? Tony saw you online, or his team saw you online and just found you, or how did that work?
No, we pursued that one.
It worked.
But so that was actually a 3-year process in the making. That started around, it was probably early 2017. And so I was in another mastermind group. So personal development has always been a huge component, and I think a major factor in what's led to our success. And I happened to be the tax guy in the group. And so they asked me to teach a tax course to the other entrepreneurs. And about half the people in the group were Canadian, and I didn't know Canadian tax. So I pulled in another guest that was a CPA, and he was what I am now for Tony's global accounting advisors. He was the Canadian version of that at the time. So he told me about the program, gave me the email contact of the guy who was running it. We cold emailed him and said, "Hey, I think we'd be a great fit. We're we're really adding a lot of value. We're more proactive. It sounds like what Tony's looking for." And he said, "That's great. Let's schedule a meeting." And we had a meeting on the calendar for about 2 weeks out. "Oh, this is awesome. We're going to crush it. There's no way they're not going to pick us." And the guy was Australian. And so his meeting schedule was 10 o'clock at night, our time. And so we had the appointment scheduled. And then for whatever reason, bonehead move, emailed him and said, "Hey, is there any way we can reschedule so that there's an overlap during our time, during during Australia business day and California business day, because that's 10 p.m." And so he said, sure, no problem. We'll reschedule. I'll have my assistant coordinate something. And 3 years of following up later, we got our next meeting.
Oh, no.
So lesson number one, do not reschedule on Tony Robbins. When an opportunity like that, whether it's Tony or not, when an opportunity like that walks, when the door opens, do not reschedule.
Yeah. Especially
that being said, Tony says things happen for you, not to you. At the time, if we would have gotten that relationship and that partnership, we were only 4 people. 3 years later, we were about 24 people.
Oh my gosh.
And so we had at that time, we had just started growing. We didn't have the muscle of growth yet. We didn't have the resources in the team to be able to handle the additional growth that being partnered with Tony poured onto us. Man. So we probably would have just totally screwed that up and not been able to handle it and absorb it. So it ended up being a blessing. But why I say the Instagram, the social media led to that is because I just stayed following up every 2 or 3 months, asking for that appointment again. And as my, following went to 10,000, say, hey, look I got 10,000 followers. I'm helping people, grew up to 40,000. Here you go. I'm helping people. Got a feature in Forbes. Look at this. Here's my article. If you want to read it, it shows how I'm adding value. Wrote a couple articles for Forbes. So just was pursuing that separate in my own time. Mm-hmm. And then as a result, that opened up 3 years later, but it wouldn't have happened without me going and build my own brand separate from that to build that credibility. And then of course the persistence and follow through to make that happen.
That's so important. And, I think a lot of people will kind of push off, myself included, and I've pushed off organic content in the past thinking, oh, well, I've got a business to run. I've got more important things to do. And just recently, as I've continued to invest more and more time into researching organic content, is you can't afford not to. You can't afford not to be out there because if people don't know who you are, they can't find you, and they can't find you, they can't do business with you. And for sure, the biggest issue that small businesses have isn't necessarily that their systems aren't perfect or they don't have an amazing product. It's a lot of times they just can't get found. So that's what's another interesting piece of that is that knowledge, when it flows through you like a river, is, instead of just like you're constantly reading all this material, all this personal development and everything, and then it just like sits in your brain versus you actually being able to share that with other people. Well, then you start to learn it as well as the teacher, you're the most informed. So I'm a big believer in that and a huge proponent of that. So that's super cool.
Oh yeah, absolutely. I mean, if you can teach something, that's how you know you're a master at it. Right. And exactly. Even if you kind of fumble through teaching it in the early stages of learning something, then you start to learn it better. And then, it comes through practice. Yeah. So, I mean, if you go back to my first videos, they were awful. I mean, terrible. So it takes practice.
Well, you show up super well today. So,
thank you.
In the book, Cashflow and Grow, you talk about how cash is king. We've all heard this, or cash matters, I think is how you put it. We've all heard this before, but I specifically want to just hear from you as, an expert CPA. Why should people be prioritizing cash first, not just in hoarding and holding on to cash, but actually structuring their business so that they can really make cash a priority in terms of how they're billing and in terms of how they're structuring their deals?
Yeah. Yeah. And a lot of times it's actually less about bringing more cash in. It's just, as you talked about, structuring your system so that it speeds cash up. So why cash is so important is, most business owners do what I call manage by bank balance. And that is they wake up, they pour themselves a cup of coffee and they log into their bank account. And if there's money in it, then they spend it that day. If there's not money in it, then they don't spend it. So it's difficult to run a business that way. Like you can be good at some, most business owners are good at something. They're just excellent at what they do. Then they have an entrepreneurial seizure and go start a business. They've never been taught cash flow projections. They've never been taught what a balance sheet is, what a profit and loss is. And so managing by bank balance doesn't give you all the information you need to make the right decisions in your business. So that's why having cash flow projection is important. Why having cash on hand is so important. We learned this, and I saw it the most as being in a position of being an accountant and working with a lot of business owners. when the whole COVID pandemic hit last March and all these businesses got shut down, there's some businesses that got to work remote and were able to pivot, or they offered new services and pivoted. But if you didn't have a handle on your cash and have a cushion of cash in your business, you were in a hot, if they didn't come out with that PPP loan to save, or the EIDLs, the disaster loans to basically rescue you, so many more, it would have been a bloodbath that last year, because no business owners manage cash flow. They don't look at their cash. They simply go and just try to get more revenue. Well, going and getting more revenue, you can't pay your payroll on revenue. You can pay your payroll on cash in the bank. So just because you sell it doesn't mean you've collected it. So I think it's just important to go through those exercises of looking at, okay, how many days of expenses do I have in the bank account that I can pay for as cash if my business shut down today? Most people, it's probably a week, 2 weeks. It's not 6 months of a war chest. And then on top of that is, and like what I talk about in the book is, and what you hinted at is, how can we look at the methods and the systems that we have of how we collect cash or how we pay cash to speed up what comes in and maybe to slow down what goes out. Now, I'm not, for my clients that are hearing this, I don't want you to go and wait 6 months to pay me, right? So, but if you've got vendors that you have on payment terms where you're paying on acceptance, can you negotiate that to pay half on acceptance and half on completion? If it's a 60-day project, or if it's inventory that you're purchasing, or, can you negotiate some payment terms? Because the reality is, if you don't ask, the answer is no. And most business owners don't realize that you can ask. And there's a lot of people that sign up with us, our accounting services. Let's say they haven't done their books for 18 months. And so we have to do a year and a half of accounting. Well, that's a big chunk of expense to pay for that all up front. And usually if we talk with them, they go, whoa, that's expensive. And when we find out the root of that it's not the amount that they're paying, it's they can't pay all that right now. So can we negotiate some payment terms? That works both ways. So like talking with your customers, you set the rules on how you deal with your customers. Now, if you create a marketing machine and everyone knows who you are and you've got people banging down your door, you can be a little more picky with how you negotiate your customers.
Exactly.
If you've got one person showing up every month and they're saying, I'm going to pay you 60 days from now, take it or leave it, at least you're getting something, then you're in less of a position of power. So I think, having, like what we talked about before, that marketing machine allows you to be a little more flexible and demanding in how you set up those terms with your cash too.
That's exactly right. And we focus a lot of time on building that for ourselves. And we've been devoting even more time lately to perfecting our marketing machine lately, and love building that for other people, but I think a lot of times in the world that we're in is, we fix everyone else's problems before we fix our own. And I know that other business owners feel that way as well. So it's good to hear even from your position, and you are not what I would consider an average or a normal CPA by any stretch of the imagination. You guys think much, much differently in terms of your marketing machine. I mean, you're still putting out content, and is your Instagram, is it Tax Saver? Is that right? On IG?
No, it's my name, just Tyler McBroom.
Tyler McBroom. Okay, gotcha. Yeah, Tyler McBroom. So
I've got tax saver as a hashtag, and that's like my audience that like community is the tax savers.
Gotcha. Okay.
Community.
Perfect. So make sure you guys look him up at Tyler McBroom on IG. Make sure you give him a follow. So I want to talk a little bit more before we dig into sales and marketing, because that's a whole other conversation. I want to talk about how to pay less taxes. So okay. I want to know from you, after you've worked with thousands of customers, you've seen the mistakes people have made. What would you say the top 5 tax saving strategies are today that people are not taking advantage of that they should be?
Yeah. So the number one thing is not anything sexy or creative or cool. And usually everyone wants to go straight for the creative cool thing, like the Augusta rule, like we were talking about before the show. Yeah. The number one thing when you're first getting started out, if you've never done anything related to tax planning or lowering your taxes or thinking proactively about it. Number one thing is keeping your books up to date and accurate. So the reason why you might be saying, well, okay, what does me doing my accounting have to do with saving taxes? Well, most business owners, just like most business owners when they're just getting started out, managed by bank balance on their spending. When it comes to filing taxes, they do their books by the all expenses end in 3 zeros method of accounting, which means, hey, Landon, what did you spend on office supplies last year? Tyler, I spent about $2,000 in office supplies. Okay, what did you spend on travel? I spent about $5,000 on travel. Okay, what did you spend on fuel? $1,000 on fuel. It's all these round numbers, and it's not accurate.
That gives me anxiety just thinking about it.
Let's throw spaghetti on the wall, and I think it's that amount, right? And so what happens with that is when you think about federal income taxes, and depending on what state you're in, state income taxes, and then another thing called self-employment tax, if you don't have the right entity structure in place, which is another 15% on top of income tax, potentially up to 50 cents of every dollar you miss of a deduction is going to taxes. So if you don't do your books because you don't have the time, or you'd rather be spending your time going out getting more sales, or doing the operations and production of whatever it is you make, and you miss $5,000 of expenses, that's potentially $2,000 to $2,500 that's going to Uncle Sam in taxes in a year. And so not having a good set of books costs you money in that regard. It also prevents us, if you actually go do tax planning with your CPA, from giving you the right tax strategies. Because we might see, and usually when we come to a business owner, if they don't have books and I ask how much they're making, they tell me the revenue number, which is the top line. So their revenue is $600,000. Once we get all their expenses in there, they're actually making $50,000 a year. But when they tell me it's $600,000 and I'm going off of that to give them tax strategies, and so we're cutting these checks and doing all this stuff, and hey, guess what? I'm going to save you $200,000 because if you had $600,000 of income, your tax bill is going to be almost $300,000. And then we go to actually prepare their tax return, and it turns out their net was $50,000, and we brought their income down by $300,000. Now they're in this huge loss spot, and it was just we did all these unnecessary things that cost them way more money in strategy implementation. And so having that good set of books is huge to have that foundation to do everything else related to tax planning.
Got it. So
what tax planning is, that's the second thing that they should do. And that is, most people think that the time of year to meet with your CPA is tax time. It's February, March. They just saw the TurboTax ad on the Super Bowl. Oh crap, I got to get my bank statements together so I can go drop them off on my accountant's desk, and he fills out a tax return and tells me what I owe and tells me how well I did or didn't do last year. That's the least effective time to meet with your CPA and the worst use of your CPA. If you're going to do that and that's it, just go use TurboTax, because we're just filling out the forms at that point. You don't need us. The best use of your CPA is to do tax planning. And what that is coming up actually right now. We're in the heart of tax planning season, which is, it's early November when we're recording this. And that is meet before year end. We run numbers. So we take, like right now, we would run your numbers from January 1st to October 31st, and then forecast what are you going to make in the last 2 months of the year. So we annualize your numbers and say, okay, if you do nothing, you're going to owe X in taxes. Let's do 1, 2, 3, 4 action items. And we prepay expenses, do things, a couple actual, like more sexy, fancy strategies that I'm going to talk about in a little bit. So that we lower your tax bill by $10,000, $20,000, $30,000. We had one client that came to us, and he had a killer year, like crushed it. He was in construction. It was like during the boom years. And he came to us and we ran his projections. Thankfully, he came to us in November, ran his projections, and his tax bill was going to be $1 million.
Oh my gosh.
Which is a good problem to have, because that means he made some pretty good coin to have a tax bill of $1 million. Problem is, he only had $1.1 million in the bank. And his payroll is about $200,000 per pay period. So when taxes were going to come due in a couple months, if he hadn't met with us, that could have put him out of business.
Wow.
So we ran some strategies, did some cool things, and got his tax bill from $1 million down to $250,000 for that year on a 30-minute meeting.
Unreal.
You don't have if you're making any money in your business, you can't afford not to meet with your CPA before year end. And if they don't have any ideas for you how to lower your taxes, go find a new CPA. So having a good set of books, doing tax planning at least at year end. If you're a growing company, then I'd say 2 to 3 times a year, meet with your CPA. Because when you're growing, your business in March looks different than your business in October. And so you have different strategies available to you at that time. So a couple other fun tricks, fun like strategy you can do. I hinted at the Augusta rule. So what the Augusta rule is it's a rule that says you can rent your home if you own it. Now you can own a mortgage on it, but you have to own the home. You can't be paying rent. You can rent your home that you own up to 14 days per calendar year. And that money, that rental income is tax-free. And so why it's called the Augusta rule is because this rule was born because every year when the Masters golf tournament comes to Augusta, Georgia, everyone who lives there clears out of town because they can get a pretty penny renting out their home. I wouldn't stay in the town either. And so the IRS said, you know what? If it's your home, as long as you're renting it out under 15 days per calendar year, you're not really in the business of renting. So we'll just give it to you tax-free. So how you can use this as a business owner, you might be like, well, I'm not going to rent my home out, to some random stranger a couple weeks a year. Like, who cares? Well, what you can do, and you have to have either an LLC or a corporation to do this. You can't be a sole proprietor, and you have to have an office outside of the home to basically rent to, but you can hold a monthly shareholder board meeting at your house and rent your house out to your company for the use of that space. And so you cut a check from your business account to your personal account, and it's deductible to your business as rent expense, and then tax-free rental income to you. And there's a couple different ways that you can identify the amount that you should pay for this. But the easiest, simplest way is you take the value of your home, multiply by 0.1%, or just knock the 3 zeros off the back, and that's the amount that you use. So if your home's worth $500,000, you do $500 per meeting times 14 meetings per year. So you do once a month, and then a 2-day meeting mid-year for your mid-year planning, and a 2-day meeting at year end for your year end planning to get to that 14 days. Cut a check for $500 each time, and that's $7,000 tax-free out of your business. So it's not a huge amount, but hey, it beats poking the eye of the stick, and it's free money just for cutting a few checks.
Yeah.
So
incredible.
The other thing you want to do is document so you want to actually cut the check, actually move the money, and then you want to document the items that you discussed with yourself. And this works really well if you have a split personality, but you want to document the items that you discussed with yourself at those meetings. So whether it's set sales goals, determine a marketing budget, decided to hire somebody. I mean, I see you laughing. I think every entrepreneur internally has a little bit of a split 100%. Personality.
I talk to myself constantly. Yes.
Yeah. I mean, usually if you've got multiple owners, then you discuss the items you are having difficulties agreeing on, and if you're like me, you have difficulties agreeing on with yourself anyways. So it's like there's plenty of split.
We're going to need to have a meeting about this.
Yeah.
I brought the mirror.
That's right.
That's fantastic advice. So just to do a quick recap so far, we talked about having a clean set of books, starting to do tax planning in November. And then number 3 would be the Augusta rule, which we just went through. So fantastic advice so far. And I know you've got a couple more like sexy type of strategies. So I'll let you kind of get to the rest of those.
Yeah. So real quick, just a couple more high level, and I don't want to get, too deep on the nuts and bolts of them. Cause that's what we're here, what we do it for, but just so you're aware of them. If you have kids under 18, you can get them on the payroll, and you can get $12,500 per year tax free, by paying them. Now they actually have to do something for that wage, and you actually have to pay them. But the IRS has a rule that says if you pay them from a sole proprietorship and they're under 18 and your children, then you don't have to pay payroll taxes on those wages, which is usually about 15%. And what happens is you pay them a wage, they get the standard deduction, which is $12,550 in 2021. It changes a little bit each year. And then they report that wage on their return, and it's totally tax-free. Now, what they do with that money, this doesn't mean you have to give them suddenly $1,000 a month allowance. They can now buy their own clothes, pay for some groceries, gift mom and dad a really nice birthday gift back. Or if you really want to set your kids up really, really well, you can take about $5,500 to $6,000 of that and put it into a Roth IRA. And normally Roth IRAs, you put in and it's after tax dollars, so that you don't get a tax deduction when you put the money in, but then it grows tax-free. When you pull it out in retirement, you don't pay taxes on it. So it's really, really a really nice vehicle. So now you can put money into a Roth IRA that's tax-free dollars that then will grow tax-free. And then at a future state, if they want to use it for education at some point, you can pull that out without penalties. Or if you just don't tell them about it, and then suddenly when they're 30 or 40, say, hey, guess what? Little Johnny, little Susie, you've got this asset over here that you have no idea exists, and it's worth $500,000.
Wow.
Like, how cool of a gift would that be? Like at their wedding, or when their first child's born or something like that.
Man.
So
that's awesome.
So that is a really cool one. And then there's a couple things you can do that high level when they're in college. You can get about $30,000 to $40,000 a year tax-free using some entity structures. And that's really like just a couple quick ones that I think would, be beneficial to a lot of people. Last, I will say the importance of getting the right entity selection. So I talked about self-employment tax a little bit. What self-employment tax is it's basically your portion of Social Security and Medicare as a self-employed individual. So when you get a pay stub, working as an employee, when you're working for the man, or the person these days, the more politically correct version of that.
Right.
You look at your pay stub. Let's say you have a $5,000 a month wage, and what you take home is not $5,000 on that monthly salary. There's an amount taken out for income taxes and then Social Security and Medicare taxes. Well, that Social Security and Medicare is about 7.5% of your pay, and then your employer matches that. And any business owners out here are listening know exactly what I'm talking about, and send 15% to the government in the form of payroll taxes. Well, when you're first self-employed, or when you're self-employed, there's no one to withhold that 7.5%. There's also no one to match it. But the IRS, of course, still wants their 15% to fund Social Security. So you're left holding the bag for the entire 15% on top of income taxes. And it can get really, really pricey for business owners when they first start really making some money. So there's ways you can mitigate that by forming an S corporation, or just looking at, and we want to look at forming an S corporation, maybe a C corporation, but in almost every case, the S corporation is what makes sense. And that starts to make sense around $60,000 of net income in your business. Mm-hmm. So just making sure you're looking at that and asking those questions around getting in the right entity type can be the difference of sending in $50,000 in a year versus $30,000 at tax time.
Wow. Y'all didn't think this was going to be a masterclass on legally avoiding to pay more taxes, but you got it today. So that's awesome. Thanks for sharing that stuff, dude.
Yeah, absolutely.
So, you and your dad grew your company from 4 people up to 50, you said, in a very short period of time, over just, I think you said under 5 years. Mm-hmm. And I mean, those aren't, that's not, necessarily like a low level of educated people you're hiring. Those are experts. Like, you're hiring legit people that, you're paying a lot of really great money to, and really changing lives with that money, and changing lives with those careers. And my question to you now is, how did culture play into profitability for you as you continued to scale up? And what were some lessons you learned along the way with that?
Yeah, culture is something I've always been obsessed with. Even before I was a business owner, I read books on how to motivate people. Culture, getting the right people on the bus and then in the right seats. And I've always believed that if you take care of the culture, the rest of it will take care of itself. And so that was, they say if you don't build a culture, intentionally. It's just you'll wake up one day with a culture you didn't intend. And that is absolutely the case. And so we sort of always built, there's this stigma in our industry that to work in public accounting, it's a grind where you're chained to your desk 100 hours a week, pumping out tax returns or audits or whatever you're working on, that it's this big, grind. And so we made a strategic decision to only work with business owners so we wouldn't have that high volume, pump out tons of tax returns grind. Mm-hmm. And then brought in things that like we would have quarterly themes where based on certain goals that we're looking at each quarter of where we're trying to move the business, we'd come up with a theme around it. So like during tax season, we had this big push where we'd sold a bunch of work a few months prior, a bunch of new clients, and we made a lot of promises that we had to deliver on. So our theme name for the quarter was Delivering Promises. And Promises was a little baby, and we got everybody pregnant Barbies and sat them on their desk as a reminder that we have this labor and delivery that we're doing here. There's other times we had 300 tax plans to deliver in a quarter. So our theme was 300. And this is Sparta, and we got little gladiators to put on their desk. And it was just a constant reminder that we're going out and, doing these tax plans. We got to get 300 out. So it makes it fun because accounting, frankly, can be a little dry. Mm-hmm. So we're looking at ways to make a culture of fun, but also a culture of everyone's rowing in the same direction and we're working together towards a team goal. Because when you're just by yourself, although if you got that split personality, maybe not, but it's usually easier to get everyone rowing in the same direction when it's just you. When you've got 50 people, it's much more challenging to get all those different personalities and those different skill sets and those different, we have, three offices across the country and across the world because we had a whole team in the Philippines. Mm-hmm. And so having that to communicate that and have a strategic direction be shared and, be cohesively rowing towards in the same, on the same boat, can be challenging. And so having a methodology in place where you're, making it fun, but also reminding them of goals on a regular basis, has been huge. And then every quarter we get the team together, and celebrate. And now we've got more of a remote team all around the country. And we've got, since this COVID thing and we were trying to look for really strong talent, we decided to open it up to work from anywhere. And that's opened up our talent pool huge, but it also creates a remote first environment. And so now basically twice a year, we fly everyone out to one location where we have a hub of people to get them together. Usually historically it's been around the dates of the Tony Robbins Business Mastery events because we all need to get together for that event anyways. Mm-hmm. And so we use it as an opportunity to fly out, some more fun and get cool. together. And, it just makes a difference when you're over Zoom or over phone calls or over emails. It's easy to lose that connection and that trust among the team members. Mm-hmm. And so getting together face to face and, going and having a beer together after the big work day's over, especially when we're doing it at Business Mastery. And these are 15-hour days and then going and having some fun afterwards. Cool. It helps bond everyone together for sure.
I am obsessed with Tony Robbins, as I said before we kind of started rolling. And I would love to know, I asked you this question earlier, but we should cover it real quick just for the audience. What was it like working with Tony? Like, give us a couple stories of what that's been like so far.
Yeah. So the best thing and what I shared before is that in my mind, like the one word that comes to mind as I got closer to working with Tony is he's congruent. Like his message is living is giving, and that, you want to continue adding value to the marketplace in every way you possibly can. And just by being in proximity to him, via, now I live closer because I just moved out to Florida and we're, closer, but just being in proximity, meaning via text message and email and, Zoom meetings, and just being able to kind of closely observe and participate in how they build an event and the through lines and the care they put together with how they're going to message all of that has improved and leveled me up in terms of how I communicate myself and to my team and to our clients and everything. And so having, he's so congruent, and he is also an absolute workhorse. Like he puts in the work. Like there's a reason. It's really interesting. Like I've been part of a lot of, a few pretty high level mastermind groups where I've gotten around some people who are doing some really big things, like Ed Milet, Andy Frisella, Tony Robbins. And these people, it's really interesting when you get close to them, you really see how much work goes into achieving that level of success. Like it is work. It doesn't happen by accident. And that's something that I've absolutely learned from working with Tony and a few others, but especially like I was saying, like Tony, when I'm texting him, if he texts back, it's usually 5 a.m. and he's still working his time, about to go to bed. But so he's a worker, absolutely, and just all around just awesome guy.
That's super cool. So
he's as legendary when you get to know him as he is when you go to his events. So
well, I look forward to that someday and fully plan on that. And I have a question really specifically for you. You seem like a really humble guy, but I want you to take that humble guard down just for a second. And I want you to just tell me, like, what makes you successful? Like you're a successful dude. You've built something. You have relationships with people that other people dream their whole lives of having relationships with those people. Like, what have you done to make yourself successful to the point where you are today?
So I think for me, I'm in a unique space where I'm an accountant. So I'm in a field where I can communicate clearly complex topics in a way that, from what people have told me, is some way that it's understandable to them and is actually exciting. So I think that unique skill set has sort of opened a lot of doors for me in terms of how it's driven business into our firm and ultimately given me the opportunity to speak on those stages. What kind of drove, if we're kind of peeling the onion back further from that, I think, I'll tell a story about when I first got to grad school. We did an orientation. As part of that orientation, we had to take the Clifton Strengths Finder test. Mm-hmm. And one of my top 5 strengths was significance. And so the strength of significance is, you do want to stand out, but it's not just you want to stand out just because me. You want to stand out because you want to add so much value that it makes you stand out. But when we all raised our hands, when they went through the different strengths and they got to significance and said, raise your hand if your strength is significance, I raised my hand, and I was the only one in the class that was significance. And I was like, yes. And so that by definition is significance and a strength, right? So yeah. Like, maybe a little, some people might call it arrogance. I don't know. But but to me, it was that obsession with, like, I always wanted to do something, whatever I did in my life. And this was back when I was coaching water polo in college. And I tried to change up the way that our offense was ran compared to different, like the way that all the other teams were doing it. I always said to myself, I don't know what I'm going to do with my life, but whatever I'm going to do, I want to revolutionize something.
That's good.
And so in my field, in the accounting field, it's changing a little bit, but historically, everyone, especially partners and firm owners, are obsessed with the billable hour. If you're not focused on doing a billable hour on a piece of client work, then you're wasting your time. And if I did that, I would never have spent the hours and hours and hours that it took to get proficient on social media and marketing and spending 6 to 9 months every day putting out content with no return, which then turned into, massive returns down the line. Mm-hmm. But so I think it's that mindset of just always wanting to do something different and wanting to revolutionize something. And that led me to being hungry to learn and continue learning, which that learning led me to notice patterns that all these successful people that I identified with were obsessed with adding value over and over and over and continuing to add value. And so that led to what I'm doing on social media. And I'm giving away, like what we talked about earlier, strategies that every accountant would be super mad at me for giving away those strategies and not charging for it.
Right.
But it's, I get paid in droves on the back end just because people trust me and they feel that connection and that establishment because I've added so much value. So I think those are kind of the steps that I would say led me to where I am right now.
That's awesome. Thanks for sharing that.
Yeah.
We talked a little bit about what people are, if the average CPA heard what you were sharing with these people, when you get a new client that comes in to Measured Results, how much do you find that they're overpaying on average? Like, do you have that number of like people are literally just either by not having a CPA,
$38,000.
38,000. So either by not having a CPA or having a CPA that is not paying attention, checking boxes.
That's the average. When we do our first 30 minutes and kind of run through all the common questions that we ask, we on average discover they're leaving about 38 grand on the table.
$38,000. That's
annual cash flow.
Annual cash flow.
Which for someone who's making $2 million a year, big whoop, who cares? Right. But my favorite is seeing the person who's, maybe making $80 or $120 to $150,000, and we're able to, maybe not do 38, but increase, lower their taxes by 15 to 20. And for someone who's making 85 grand a year, increasing their cash flow by $15,000 is massive. Huge. To their lifestyle. Massive. They can actually, fund their financial future in terms of setting aside money for retirement, or they can pay for their kids to go to, they can set aside savings for their kids to go to school or actually go on a vacation. There's just so much that you can do with that money. It's, what I talk on at Business Mastery is I talk about, reflecting on what is your why and why you're in business. And then we go through all the saving strategies. And when you look at if you had an extra $38,000 of annual cash flow and you reflect on why you're doing what you're doing in your business, how much more could you fuel that why with that extra cash? It's so impactful. And most people, the media loves to say, all these people are evil. They pay zero taxes because they just want to keep it all and, go buy a fancy car. I tell you what, 95% of the business owners that I work with, they're barely eking by, and this allows them to actually feed their families by saving taxes. Or if they're successful and they're growing more, they don't go buy a nice car with those savings. They go hire 2 more people, or they go invest it in marketing to grow their business and go create more jobs. Yep. And so that's the power of tax planning. It's not evil people behind the scenes, looking at these loopholes. It actually drives our economic engine in this country.
Absolutely. Yeah. I'm a big believer in that. It's not that they're filling up a vault with gold bars. I mean, people just don't get it. They don't understand the actual cash outlay that's responsible for growth. They don't understand that, and they won't until they're in that position.
Well, and most employees think, and this isn't their fault, it's the fault, I blame a lack of financial education out there, but most employees think revenue minus my salary equals what the business owner's taking home and going having fun. Even if there's 100 people in the organization and they're doing, $50 million a year, their salary, I'm only making $60,000 and he's taking home $49,940.
Right.
That's not the truth.
It just, it does not compute. It does not compute that way. As we kind of wrap up here, I want to take a second to remind our listeners, guys, the way that we get, awesome people like Tyler on the show is by, you guys leaving reviews and sharing the show. Just share this with one people. I just asked that you share this with one person if you got any value from it today. And I know you guys did, because I've been taking notes the whole time. So please share this on Instagram. Make sure you tag Tyler at Tyler McBroom. And we're going to wrap up with just a few more questions here, but I just wanted to remind them to share that. So as we kind of close out, I want to talk a little bit about deductions versus free money. So a lot of people think they think like a part of the tax strategy is to go buy a Lambo or to go buy that house that they've been wanting, but in thinking that that's quote free money. And that is definitely not the case. So I wanted to have the master talk a little bit about that.
Yeah, it's not like you go buy a $50,000 car and you send it into the IRS for your voucher to send them $50,000 back. It doesn't quite work like that.
Some people treat it that way though.
Yeah, so there's the two pieces of terminology that I want to clarify here. There's deduction and then there's credit. So when you get a tax credit, it's dollar for dollar. So what are tax credits? So there's education credits for when you send your kids to college, and it's a $2,500 tax credit based on the tuition that you get. That $2,500 credit literally is $2,500 of cash in your pocket. That is that free voucher. A deduction is it reduces your income, and so your actual cash savings on that is the total cost of the deduction times your tax rate. So if you go buy a $50,000 car, now to get the deduction in year one, it's got to be a big car, like a heavy car over 6,000 pounds. Or even if you go buy a new computer for $3,000, or whatever it is that you buy as a deduction in your business, let's say it's a $10,000 deduction, and you're in the 25% tax bracket. The actual cash savings you get on your tax bill is $2,500, which is 25% of that $10,000. So going and buying something to save taxes is like saying, I've got to buy it because it's on sale. I can't afford not to buy it. So you're still in that case, if you're spending $10,000 to save $2,500, you're still out $7,500. So if your business needs the purchase, or if you're going to go buy it anyways because you're in the market for a car or whatever that looks like, then go buy it. But don't just buy it simply because it's on sale, or because you're going to get a tax deduction. That's not a financially wise thing to do.
Gotcha.
Now, the only exception to that is just go spend a bunch of money on your accountant, because we'll always take that that's our favorite deduction.
That's
I missed that one when you asked for the top 5. Number 1 deduction is pay your accountant a whole bunch of money.
Hire Tyler. I do want to give you a chance to talk about that, because I love sharing products and services that are like life-changing. And I genuinely believe working with your firm can change people's lives. So what are the qualifications to even get to work with you? I know that you don't work with just anybody. I know you only work with businesses, and then there's even qualifications above that. And I don't know if those have changed since I listened to you last. So I just wanted to give you a chance to update that.
Yeah. So generally for my CPA firm to work with us on a one-on-one tax basis, you've got to be a business owner. And then typically we want to be in a position where we make a positive impact on your business and your life. And so meaning we want to either save you more money than you're paying us, or find more profits in your business when we're doing like CFO work than you're paying us. And generally that makes sense at around $250,000 of net income. So that's the one-on-one CPA firm. Now there's a lot of business owners out there that aren't at that level, but they still need these tax strategies. And so I actually recently created a group coaching platform where I teach all the strategies and coach you through it on doing it yourself. And that's called the Cash Profit Accelerator. Gotcha. And that's right now, you get lifetime access for under $500, and you get all the strategies. And I'm super fired up about how it's going to impact people. As I do weekly coaching calls where you get Q&A, and we talk about different strategies and tax planning and how to do industry benchmarking and all that stuff. And so that's I'm super fired up about that for the business owners who aren't quite at that point.
That's super cool.
So those are the ways or you can, if you go to my tylermcbroom.com, you can pick my book up for free. Just go to the shipping. So
yeah, guys, and do that. And this is the book again for anybody that didn't see it first. But if you guys aren't watching online, it's fantastic read. Highly recommend that. Tony Robbins recommends it, so you got to get it. So to kind of close out here, we like to finish off with a couple questions. So if you were to speak to your 21-year-old self today, what would you tell that young man?
Don't buy the brand new car that you bought in the last semester of college.
Okay. What would you have done with it otherwise?
So here's why. So I stupidly, because I didn't really, I was an English major at the time. I went and took out debt to go buy, it was only a Honda Civic, so it was like a $22,000 car, but that was before I even had a job. I was just living on my valet income and getting a bunch of cash. So,
right.
So I didn't realize now, and so how I'm going to translate this into like a business lesson is, the payment was like $460. It was literally like what Dave Ramsey talks about. And he says the average car payment it was the exact number of that. So like it sticks in my mind.
You're getting slapped by Dave every time you get in your car.
But I'm not saying all debt's a bad thing, but if I was in a place where starting out my life and I had taken that and put it in a little side nest egg to grow a business, like right now I could take that $500 and turn it into $2,500 like that. Mm-hmm. And so if you're in a position where you are trying to grow a business and you can invest in your business instead of investing in toys or, fun things, absolutely do it. So that's what I would say. And then the other piece is, if I'm actually talking to my actual 21-year-olds, so I'm giving myself actual, like my actual 21-year-old self, not just blanket advice to a 21-year-old, right? So don't buy the car. And then, get some skills that can translate into actual income. Like, and it turned out, it took me a while for my English writing skills to translate into actual income, and they did in the long run. Mm-hmm. But I think that when you're 21, don't be afraid to take the job that sucks if it's going to give you skills that will make you a lot of money later.
Yeah.
Because I was afraid to do that at 21. And that's why I, went and dabbled and tried to write my own book. And because I thought it was really, really cool to do all these cool job things that, that don't pay anything. But because I didn't want to do the job that sucked, which in my mind was going and learning how to do taxes. But I finally got tired of being broke and went and I did the job that sucked for a couple of years. And when I started to do that job that sucked, doing taxes and sitting behind a computer for 80 hours a week, if you'd have told me that it was going to be leading to me speaking on stage to people from 150 different countries and thousands of people and partnering with Tony and all the other things, and having, social media presence and all this stuff, from going into doing that job that sucked, which is just doing taxes, I would have laughed in your face. No way, that's possible. I got to go do this book thing, this really fun thing that's super cool. So don't be afraid to go do the job that sucks, that's giving you tangible skills, and then pursue your passion and that cool, sexy thing on the side while you're building that portfolio of skills that add value to the marketplace.
You can totally do both. And I think people forget that sometimes. So that's great advice. Last question. If you could recommend 3 books to someone that's trying to grow their business and just have a bigger impact on the world, what would those 3 books be?
Well, I'd have to start with Cashflow Grow, which is my book, because,
right here,
I'm a little biased, but other than that book. So if you've got a business that's scaling and you're trying to build an actual organization, I would start with Traction by Gino Wickman.
Yep.
Phenomenal book for an operating system for your business. And then beyond that, once you kind of get the basics of Traction down, I would dig into Scaling Up by Vern Harnish.
Yeah.
It's, and actually Gino Wickman was a scaling up coach, and that's kind of so Traction is kind of like, in my mind, scaling up light. Wow. And I'm not knocking Traction, not knocking EOS. It's a great operating system that I know a lot of people run, but Scaling Up kind of takes it a little deeper. It's in my personal opinion. So those are 2 that are really good. And then I haven't read it in a while, so I don't know if it's still as relevant as it was, because it's just the landscape of social media and everything changed. But I'd say a book that really, really changed me was The Thank You Economy by Gary Vaynerchuk.
Yeah, it's a wonderful book.
And I think why I'd recommend that one over like some of his others is that it talks about the philosophy of adding value and the philosophy of how to build a brand, more importantly than the nuts and bolts of, this is the type of post you should post on Instagram to get more engagement.
Yeah.
And, but I think I that is probably like one of my all-time books for sure.
Yeah. It's one of the first books I read on marketing ever, actually, is The Thank You Economy.
Yeah.
And what's funny is Gary talks about how that book actually is like one of the least selling books, but it's the most important. Have you heard him say that? Yeah.
I have heard him say that. And because everyone's like, oh, that's not my favorite one. He has his favorite. I'm like, no, that's my favorite.
I want to crush it.
It's because it works. It works. Like I took those philosophies and applied them to my business, and it's done very well for me.
Yeah. And to kind of add earlier from when, I told you just like, don't be humble for a second. Tell us what makes you successful. One thing I would add to you, man, is you're an executor. You're a very disciplined person, just from what I've seen online and what I'm seeing from talking to you now. Like, how to execute. And I think a lot of people miss that. I think they read a lot of books, they go to a lot of seminars, they take a lot of courses, but they miss on the actual execution of that, what they learn. And I think you've done an amazing job executing. And I'm just pumped to continue our relationship here, and hope to see you at a Business Mastery event, dude. Yeah.
Well, thank you for that. I appreciate it.
Absolutely. Yeah. Well, thank you, dude, for coming on the show. Really appreciate it. Man, this has been awesome. So
yeah, absolutely. It's been fun. Thanks for having me.
Very cool. Guys, that's going to do it for this episode of Spark to Fire. As I said before, please leave a written review on iTunes, and make sure you give us a 5-star rating. This show, the best way that we can grow this show is by leaving a review and sharing it with your friends. So please share this with one person if you've gotten any value today, and keep striking.